Let's talk a little bit more about this record pessimism. Perhaps what's explaining it is in a new LendingTree survey. It shows that 1 in 5 Americans are now using buy now, pay later apps to buy necessities like groceries, not just big ticket items like appliances or TVs. And my next guest says the Fed needs to pivot fast to avoid a recession. Joining us now is Mark Zandi, chief economist at Moody's Analytics. It's good to see you, Mark. Do you want to just jump in here? I mean, how important, when you look at the data, is this consumer pessimism as an input to what happens from here with the economy?
Well, it matters. I mean, at the end of the day, a recession is a loss of faith. You know, consumers lose faith that they're going to hold on to their job and they pull back on their spending, a loss of faith by business people that they're going to sell whatever it is they produce and they pull back on their hiring and get into this kind of self-reinforcing cycle. So this matters. But I will say there's lots of different surveys. The one I find most useful, engaging prospects for the economy recession, and this no slam against the CNBC survey, but it's the Conference Board survey. I find that to be much more prescient. And, you know, if you look at that, people aren't feeling great, but it's about consistent with this long run average. And no sign of any weakening there. And that's the key to that losing faith. You see this big collapse in confidence, people running for the bunker, stop spending. I just don't see that.
Yeah, Mark, it's interesting because you're sort of saying the Fed needs to pivot or else we'll be in a recession. So given the discussion and kind of debate we were just having where the bank analysts and investors are saying the banks aren't telling us we're in a recession, but then we have Steve's survey and they say, well, the consumers feel like we are in one, and you say the Fed needs to pivot. I mean, what are the most important data points for you?
Well, look, I don't want to be Pollyannish. The economy is struggling with the high inflation, and that explains why people are so down. I mean, the inflation is a problem. Steve pointed out it's cutting into people's purchasing power, and they are using credit. The buy now, pay later is the credit they need to kind of fill the hole and maintain their spending in the face of the declining purchasing power. So the economy is struggling. It's weak. In my view, inflation, which has been the #1 priority for the Federal Reserve, as it should be, is coming in. All the trend lines look great. It feels like it's coming back into target, and I can say that with increasing certainty. And given that and what's going on in the financial system, the banking system, it seems to me this would be a very opportune time for the Fed to stop raising interest rates.
Yeah, and at the same time, we have these. So you've pointed out, others highlighted it, Mark, that we've seen consumers actually have positive disposable income lately because of that inflation delta relative to their earnings, things like that. They still, here sitting on all this cash. Why isn't that translating into more optimism about the state of things?
It's a lag, right? I mean, people are, and inflation's still high. I mean, people are still going to the grocery store and they're still paying $3.50, 60 cents for a gallon of regular unleaded. Their rents went up, 10%, 15% last year, and they're paying these higher rents. So they're, what they're feeling right now is a reflection of all that stuff. But inflation is coming in, and when you conduct this survey a year from now, my sense is if things don't, we don't get hit by another shock, and the Fed does the right thing here, those survey responses will be better. So, it takes a little bit of time for the reality of what's going on in the economy, for the data that we're observing, for people to really feel in their everyday lives.